Good turnaround Tuesday. Richard, Jerry, how's everyone doing? Fine, I hope. Are the guys in the room?
Yeah, morning, Dale. You all right?
Yeah, doing okay. So, as expected, we're trying to make a run up here in the end.
Well, just seen it get bitch slapped.
Yeah, what do you think? A failing rally, is that a possibility?
I don't know. Stick it on a 1 minute chart for a second.
Oh, wow.
Yeah.
Yeah.
Not sure what's going on now. I don't know if there's a headline out.
Yeah, that's changed the whole character of everything prior. So perhaps we are going to get some type of reversal here. I thought we'd probably it'd be a layup for a new high. When I look at the daily, it tells me not to do anything, but not to short it yet till it takes those stops out. But I've missed many trades waiting for things like that.
Yeah, I'm in that boat now. I'm itching to have a little short. I don't know if a lot of this is going to be end of month stuff, and if that's going to ramp higher on just on end of month.
Oh yeah, that's right. Kman said wonky last few days of the month.
Yeah. Good
wonky,
morning. Good morning, everybody.
Good morning.
I think today we're trading value date end of month, and U.S. corporates may have some shopping to do. I'm actually a bit long dollar yen from yesterday, low 135s again, thinking that this may happen. The Bank of Japan also fighting the title was Bank of Japan is attacking speculators in the JGB. I said, wow, if a central bank is now attacking speculators. No, I think we may. A lot may have to do with the end of month, end of quarter, end of half year. So got to be a bit careful running it too blindly long. But I've already started to raise my stop, so I might be running it into the fixing tonight and then see what happens.
Okay.
Yeah, but that it is possible in such markets that if there's really dollars to buy. There's not a lot of resistance from the Japanese exporters. It appears it went relatively easily through the 136.
Okay, all right. So I think the close is going to be important here. How about you guys? I mean, how we finish on the day.
Yeah, I usually kind of trade the clock or watch the clock more than levels when we come into the end of month, quarter, half year, and then see where we end up once we get those last days fixings out of the way. The way it has been going lately is that we know that the models are calling for dollar buying, but the way it's been going lately with those preemptive and dynamic hedging, it most of the time goes in the way of the models or what is logically needed to do until the day before last, and then things tend to reverse a bit. So I'm going to have a close eye on the clock again.
Okay, so dollar up, 18, but at the same time Aussie up 22, showing a little inherent relative strength for the first time in I think a week. Any view on Aussie? Anyone?
Not really, but I do think the 68s that has been shown already many times are going to be important, right, for the close of this month.
Okay, you think they're going to break these before?
Well, no, I think they're going to be important to
okay.
Where we go. Interesting about the Aussie, if we link it to risk and link it to China, is this morning China said that they would shorten the quarantine requirements for foreign companies' representatives. The risk had a tick up as it came out. CNH went stronger, and then the Aussie followed as well, went stronger as well. But in CNH at least, everything seems to be reversing right here and now. We are back to pre-announcement levels. And then there is this, end of month, whatever. For people trading really purely levels and don't care about anything, that I think those low 68s are going to be really important, really important.
Yeah, it looks like, we talked about it yesterday with Blake and, some type of little wedge developing here, and this line comes in only 100 lower now. So maybe we'll get that
creeping,
test.
Isn't it?
Huh?
It's creeping down there.
Yeah. So we'll see if we get that happening here. Yields are trying to pop with the yen. I don't know if we're going to new highs on that. Your opinions, guys?
I think it's following the data. Got good pending sales yesterday. Good durable goods. This is the swings we're going to get. If US consumer confidence sucks, everything will probably turn around.
Yeah, so I don't know if it has the energy. One thing I'll be looking for is if the yen is at new highs, similar to, the recent, before we had that little pullback in yen. Yen makes a new high and yields don't, would be kind of a tell for me in the bond market. So I know we had a little down day and people are still pretty bearish bonds, but it's possible that we're getting some type of bottom developing here. I don't know if there's one more low or we're going to hold and put in a higher low, but I still think being short bonds at these levels is not prudent. So you look at some of the high yield looks a little worse, but yet risk is still acting okay. And here's the corporates. They look worse, don't they? They look like flags, although so does the TLT. I guess you could say it does, but I don't know. I think that we're much closer to a near-term peak in yields than we are to just a continuation of that bull move. I guess we'll see.
Well, that's a good question. Good morning, everybody.
Hey, buddy.
I've been saying for a while, I think yields are going to have another pop and take out the highs.
Three and a half.
Yeah, take out the highs, and I think that will be the last move. But obviously,
that could be it. Still,
it could be. It depends on.
What backs it up technically is this. So we made a new high right here.
Yeah.
And the momentum confirmed it.
Yeah.
New high mo. So.
Yeah, it will depend on the Fed. It will depend on what the markets are now trying to figure out what the terminal yields are going to be and how it's going to go from there. Because remember, we're already pricing cuts in late 2023 or something like that, which is it could well happen. But at the moment, the Fed, I think, will continue. They will continue with another 75. This is their chance. I've said this so many times. It's a chance to load up on some ammo for the future. And as long as the markets are not collapsing, yes, we are lower in equities, but we're not going down, in a straight line. It was nowhere near to what we saw, say, in February, March 2020. So as long as this is a kind of controlled move, the Fed's going to keep going. Because really what they want is they want to bring down inflation. They actually want to bring asset prices down as well. But they want to do that all in a nice controlled manner, which we know is probably impossible. So so my view is yields are going to continue going up because the Fed is not going to stop. And when the Fed stops or when the Fed starts sounding dovish, then that's the time to reconsider and think about picking a high in yields, a high in inflation, and a low in equities. But until then, I think the trend is your friend, and this is a pullback, which in yields and in and a little spike higher in stocks, which I think is going to be reversed. So I think S&P that you're showing now, the 4100. I've said that for a while. That's a place where I'll get interested.
Yeah, there's actually a trend line. I anchored it against the high that we had up here, which was the best rally we had since the top. And there's a few tags here. It's almost parallel with what we have here, so that's going to come in just a shade over 4,100.
Yeah, and to answer, our friend Charles says, won't yields go up next FOMC hike? Yes, the federal fund rate is going to go up, which is the overnight rate, but the 10-year yield has already priced a lot of that in. So it's not like the hike 75, 10-year yields go up 75, obviously not. So it depends on what the market prices, and usually the market prices it first, and then it gets delivered by the central banks. So to answer that question.
I think this is the candle of the day that Ryan has brought everyone's attention to for maybe something changing in the end is this. So pay attention to the end today. See, I never would have I never would have noticed that, Ryan. So yeah,
you would have picked it up eventually, mate.
What's that?
You would have picked it up eventually, mate.
Yeah, you know, a couple hundred pips lower. anyway, so gold silver ratio, you know, it reversed at a pretty interesting area last week. You know, we weren't able to make new highs. Possible failing rally, you know, if we get something like this. But the key is 82 in there's your 1 minute. Key is 82 in the gold silver ratio. I think you have to have a bull bear line there. This red line. It's almost a moving average, actually. You can see how it tagged it last time, and we made a move, and then silver suffered again. But back under this level, I think you have some acceleration back down here, and silver should way outperform. And I was thinking about that yesterday with the gold sales, the ban on them from Russia. It might even put some jet fuel into silver, as you know, maybe traders that want precious metal positions may gravitate more towards silver because you know, there hasn't been any kind of sanctions on silver.
We know that silver is gold on drugs, so it's it's always going to be outperforming or underperforming, you know, both sides of the move. But
just to jump in, I don't know if this has spooked markets because euro dollar's tipping over a bit as well. Hungary, they've done the old go big or go home. They've hiked rates from 5.9% to 7.75%. They expect to only hike 50 basis points, and they've gone 185.
Nice.
They're kind of the outlier. I was reading something, an article about, you know, allowing Sweden to enter the EU or NATO. The Turkey has a price to go along with it, so I'm not sure what it is, but here's something that I think is going to be important to the market. So was last week real for a failing rally that's going to continue, or was it just another break to buy? I think we're going to know pretty soon. I don't think we should trade over 115 if that's the case. In fact, I'm taking a shot up here. You know, you have to risk $1.50 or so, which isn't, you know, 10 minutes in WTI. But what do you guys think that this big break, this $22 break, and we come back about halfway here? Any view on the energy market? I mean, if they're worried about Russia selling gold and being able to do it, they're still selling oil, right, Ryan? I mean, they're just selling it to India and China, and I forgot who else.
Yeah, they backdoor it, don't they? But I think this move in oil, as Kay spoke about on the Flow Show, is maybe down to the Macron comments yesterday that Saudis and UAE, I think it was, pumping at maximum. So they're not going to get any help from there in terms of raising production. You know, I think that's what that big fat blue candle is all about.
This one right here. Okay, so when's Biden going to meet the prince?
And I'm not sure.
I think it's this week. Yeah. I mean, I think he goes from the NATO summit to Saudi Arabia. So,
I hope he doesn't bike ride over there. Did you see that clip the other day?
Yeah. Well, at least he'd be falling in sand. You know, a little softer. Better than concrete. Well, look, you know, his staff said, Joe, Please put your training wheels back on. Anyway. Anyway, at least he's out there trying, you know.
Yeah.
If it, you know, how many 95-year-old guys could ride a bike like that? So, no. You know, anyway.
You can.
Yeah, well, I haven't been on it, but I did swim quite a bit yesterday, so that's good. I can still go. Dixie, look at this, guys. This would be a classic 1, 2, 3 if we got one more high out of the Dixie. You know, here's the confirmed high, and the yen looks a lot like it too. You know, the yen only on the daily looks like the Dixie weekly. Couple of potential 3-drive setups. I'm just trying to be patient and wait. We have inflation numbers out this week, right?
Yeah, ton of inflation stuff out this week.
Yeah, we had we had the Bank of Japan's core inflation number out overnight, which came in like 0.1 above the prior one at 1.5%. So they can still hide behind that one. But then we will have the June data coming out later this week. What also, if I may, last little word that might have sparked a bit of the moves today is that famous Macron supposed leak to Biden when he was talking in his ear, but loud enough so the press could hear, that UAE and the other Middle East countries were not able to raise oil output too much. And that came out last night, if I believe, or overnight. And that now is underpinning oil and might have been like somewhere helping to for this dollar yen or the yen to be a bit lower.
Okay. And Ryan, that's your local currency. Could we get another flush to 118 here?
118, I think it's possible. It's getting a bit sideways, so it's sort of stopped going down for now, which tends to make me think is a bit more balanced than it has been the last few weeks.
Yeah.
But I don't see the news getting any better out of the UK anytime soon.
Okay. And Looney, really kind of a difficult market to trade. I guess this was just a stop hunt up near 131, but maybe this is a buy zone in here in USD CAD, and we're going to blow through a double top. Any feeling on Canada here? This might be a break to buy for another run. Don't jump out everyone at once on there.
All right, fine. I'll say something.
I know you've been trading it.
I was letting you guys go crazy this morning. How's it going?
Good, buddy. So I know you had it as a range type of trade.
Yeah, well, you know, we have been in a range, but actually the dollar CAD was one of the only currencies that broke overnight, and I'll pull it up.
Okay, bro.
Let me go ahead and grab that really quick. You know, we broke the 38% retracement, and we broke this support. We've been testing it like all towards the end of last week, and we broke below it last night. Took the stops out below the 128.60 level. The triangle on a full extension will take us down towards the 618 retracement, down towards 127.50 if we make it there. But we are seeing some dollar. We are seeing some dollar strength come through the market right now. You got the euros actually testing support and breaking through what I would consider is wedge support. We've had multiple failures here above 106. Now we're rolling over, and you know, I don't know if this is a lot of end of month, end of quarter shenanigans. I'm assuming it is right now, but we're seeing some dollar strength come through the market at the moment. So that's the thing that you got to be a little careful with. But it's not just the dollar CAD. It's take a look at the Canadian yen. The Canadian yen was also breaking out aggressively overnight as we broke through the triangle. And, you know, we're approaching like a Gartley reversal area, which, hell, that might even be it right now. But I think we could stretch a little further. But you saw the move in the dollar yen, you know, that dollar weakness. seeped in the dollar yen a little bit. So anyway, that's the Canadians. Like I said, that's been the only real mover overnight is the dollar CAD. Do you guys have any views on the Canadian? I mean, with crude oil continuing to be pretty strong, you figured it was only a matter of time before the dollar CAD broke down. But any thoughts there?
I'm short a little euro CAD since the morning. The 136 was a bit of a level. Tried a couple of times, and then when I saw oil start to go higher again, I went a little short euro CAD. Maybe a bit support around here, but yeah. And the big one is of course lower down, 133.90 figure, but around here, break and hold below sub 36 is already enough, I think, to scare the bulls if there are any.
Yeah, I mean, looking at the euro CAD, I mean, we did crack some support, but man, this is a pretty good range. But we're at the middle of the range. We could easily, see 134 and change. Probably no problem there. I mean, just based on what I'm seeing, we've had actually a lot of euro crosses move. Recently with the euro, like here's the euro Aussie, little rejection after a little double top up here. But the euro sterling has been abnormally supported. What do you guys think about this euro sterling? I mean, every time you think it's going to break out above 86 pence, it just kind of reverses again. And Ryan, you've traded this one pretty aggressively. What's your thoughts here with this pair? Because I don't know what to make of it at this moment.
Yeah, it's a difficult one. This one can grind you down to death with its slowness. But you look at that picture there. The trend, the short-term trend, is obviously higher, but we just can't get above and hold the key levels. 86 is a level. Can we hold above it again now? That's a question, and I don't have a great conviction at the moment. I'm still long from down below. I don't have a great conviction on these breaks. But I'll be looking at the 87 level again. That for me is the cruncher. We had that false break up above, as you can see there on your chart. But that's the next big level for me. So I'll probably try and play that the same way I played 86 the first time, which was try a break trade to add to my core position. But if it doesn't work, take some profit and keep my stop close. And if it does break and hold, then I just fold some into the core long.
Yeah, it's one of those pairs, and it has been for the last, I don't know, a couple of weeks. Every time I see it above 86, I'm like, oh, here we go. And I haven't traded it. But I keep thinking every night because, I do all the, every night I go through the basic technical analysis through all the charts and, all the end of day analysis. I'm doing those updates, across the board through all of our assets. And so I naturally go through the euro sterling, which is one of the pairs that we do cover every day. So every morning, I wake up and I'm like, oh man, this thing is probably going to be higher, even though I'm not trading it. I find myself wrong almost every day. It just gets slammed back down again. So
yeah, I think this week's going to be key for this one because we've got all these flash CPI numbers coming out for June. I think it's going to be what settles the argument between 25 and 50 pips for the ECB this month.
Yeah.
If we do see this beating expectations, inflation still ramping higher, I think that's going to get the market starting to, as it does, get all excited about 50 pips, and then people start talking about 75 pips for September instead of 50 pips, and we go through the whole rigmarole of those rising expectations, and of course that's going to probably play into the euro. Any pair, euro sterling, euro yen, euro dollar, and we'll get a lift up if that happens.
All right. Well, that sounds. It's like I guess. Well, I don't know. I guess I'm I try to get some cues from like some of the other sterling pairs, and man, those things aren't moving either. Hey, do you guys see this move lower in gold? I mean, we are approaching support, and one of the things that I can't get out of my head is how many people are playing gold to the long side are trying to play the inflation narrative, and they're just looking for some sort of trade that's going to work for them. I mean, you think about a lot of things as far as our recent moves and the moves that we've seen in the markets, where you go, okay, well, the stock market's selling off. What's going to be my natural defensive play if the S&P has been moving? Well, I'm going to go ahead and buy bonds. So you go and buy bonds, and the bond market's just getting crushed, and that's not the trade. And you're like, well, I'm going to hedge my portfolio with inflation, with something that's going to be an inflationary hedge, and I'm going to buy gold, and that hasn't played out very well. I mean, at what point do gold traders pull the plug on their longs? You guys have any thoughts regarding gold? I mean, if it can't rally in the current environment, what's going to make it rally? What do you guys think? Okay, I have to ask Stelios.
I think.
No, go ahead, Kman. Go ahead.
I think 1800 for one, because that held last time, and then 1780 is going to be the magic number again, in my opinion. It's been a couple of times in the past. That should be the magic number, but I didn't see too much reasons for it to break either side. To be fair, right here and now, unless we get a big yields move or something different in economic data. It's kind of logic that we are trading this range. To me,
I think it hasn't performed because it's more of a monetary hedge, and we need a bear market in the dollar to really get the precious metals going, and we're not there yet.
Yeah,
especially if we have one more high in the Dixie, Blake, up towards 106, and the euro pukes one more time. So
you think the dollar index still got the 106 in it? Yeah. Okay. All right.
Unless it takes out 93, and then it's off the table. 103.
Yeah. This is one of those. The dollar index, obviously, we diverged as we hit new highs. Caught all the people trying to chase the market higher. But now relative strength is mid-range. It's really it is definitely a tough call at this point. I'm playing the dollar to the short side right now, personally. Yeah. But I've been shorting, like the dollar max has been, more of my go-to trade. But we're approaching some support here. We got equities are actually kind of rolling over right now, and we have some data coming out. Just a little heads up. We've got not important data. We got goods trade balance and wholesale inventories are coming out. We're going to have house price index coming out a little bit later today. I think the data that people are going to be looking for a little later this week. We'll have GDP numbers. We'll have, but the PCE on Thursday is going to be the real market mover. But we'll have to pay attention to the data coming out. And I have to also mention that it seems like summer's here a little early. I hate summer trading conditions, but it seems like we've been there the last 24 hours. Anybody have any opinions about summer trading? And let me ask you guys, based on your experience, when has summer started for you guys? Usually for me, it's like the end of July, beginning of August. But what do you guys think?
Beginning of May.
They may go away.
You're not helpful. All right. What do you think, Ryan?
No, I don't think the volatility is going to drop away. I think because we've switched to a market now that is going to be guessing what the central bank moves are data to data, we're just going to get these lulls in between the data points. And then we're going to get a volatility spike. Market jiggles about, makes its move. And what we have to look for as traders is, does that break the trend or does it not? Does it push prices outside of what we know is already being priced? If we get a really bad consumer confidence number, the market's going to go, well, the Fed aren't going to hike as much, maybe. Well, they're not going to change their mind over one number, and they're not going to suddenly, they've promised us, 50 pip hikes or 75 pip hikes or whatever. They're not going to suddenly reverse that in the next meeting just because of one consumer confidence number. So there's a potential opportunity if the market goes too far one way, out of the balanced ground, let's call it.
Yeah. Well, that goods trade balance number came in a little bit better than expected. It's not expecting to move the market at all. But let's not forget, this is the end of month. It is also the end of quarter. So we're going to, everybody's, year. I'm sorry?
And half year.
And half year. And everybody's expecting dollar weakness. We're expecting, or I'm sorry, dollar strength. That's still 5:30 in the morning for me here. So everybody's expecting dollar strength to come through the market. Equity markets have been weak. Naturally, you're going to have dollar redemptions as a result. That's expected. One of the things that's different now between previous years and years past, fixings used to be usher in a lot of the moves when you're talking end of month, end of quarter. Market makers have gotten a little smarter over the last several years. They've really tried to parse out a lot of these orders throughout the course of the week. So, that doesn't mean that you can't get one final push on a Friday. But we are seeing definitely end of month, end of quarter, half year flows throughout the course of this week. And matter of fact, before we go to Dale's interview, Kman, since you're the last person to really be on a desk, from a bank, how are you seeing flows this month, this quarter?
Well, actually, the month has already been light in flows if we have to believe the stats. So I'm not saying that summer started early, but it does seem that the main flows are a bit on the sidelines. So we may see some volatility, but those people may want to wait for another couple of central bank meetings before really pressing buttons with more precision. Let's put it that way. So yeah, I think July, August may be light, but for that not less volatile. Let's put it that way. We have seen historically we have seen big moves in August.
Just quickly, Blake. We probably had one of the best flow shows so far this morning with Michael Brown, and we were talking exactly about these sort of things, the flows and how they've changed over the years, the differences between when Kay and myself was active on the institutional side. So if people want to check that out when it gets released later, a lot of good information there.
Yeah, and I'm going to go ahead and make sure I put that in the chat box here. You guys, make sure you guys are joining the flow show with Ryan and Kman. And you had Michael Brown on today. I love Michael Brown. He's great. How and you guys enjoyed meeting with him today?
Yeah, it was great. Really good.
Awesome. Yeah. So you guys just make sure that you're listening to those every day, because it's helping you prepare for this session as well. So Ryan, Kman, Stelios, Dale, you guys, thank you very much. Make sure you guys check out ForexAnalytix. Try it out. It's $1. Jump in our community. And Dale, it's all yours.
Thank you, Blake. Team, thank you, guys.
Thank
Cheers,
you.
mate.
Thanks, Dale.
Hey, Dream Team, thank you. And there were a lot of questions about gold today, and we have a perfect guest for it. So, James, welcome back to F.A.C.E. How are you?
Hey, Dale. How you doing? How's my sound?
Sound is good. Could do a concert with that sound. So, are you going to show anything on your screen, James?
Yeah, if I can share it. Let me see here. One sec.
Okay.
Yeah.
So while you're doing it, James is completely immersed in precious metals and the cash, and advising people on, timing somewhat, but more about the principles of sound money. So, James, I'm not seeing anything yet.
Yeah, I got
on
you.
your screen. Okay, so here's a couple of things. Yeah, here's a couple of things you want to talk about.
Yeah.
Let me open it up with the news out of the G7 about, what's your view on the ban of Russian gold sales?
It's, I think what they admit publicly that it's more just an expression of political, solidarity, I suppose, between the people who are aghast by their invasion of Ukraine, and they're trying to show a willed front against Russia. But Germany's there, and I'm not sure Germany is as stout and as willing to put up such a show. But in the end, the gold, it's more or less symbolic. Gold can flow and move. It's like oil, it's the same as oil market in the sense that once you go around trying to push down on it, it flows out somewhere else. And it's kind of like that. If you've ever been to a carnival and you try and beat that game.
Oh, whack-a-mole.
Yeah, it's a whack-a-mole. It's essentially a game of whack-a-mole. And, if you're talking about perhaps the most opaque but universal market in the world, the amount of smuggling that goes on and chicanery that goes on, if governments try and get in the way, or if they try and tax it, et cetera, it always finds its way. Russia is on the cusp. Within the next year or two, it's going to be the largest gold miner in the world. And that's going to be regular for like decades, because Siberia has a lot more gold than I think most people realize. And they are going to be mining that area for a long time. So Russia's going to free labor too, right? I think so. I mean, that's
so their production cost is zero.
Yeah,
they have equipment and energy to run. Yeah,
sure, but they don't have a lot of the ESG type of stuff that gets pushed on other large gold miners. And it's just a situation where Russia is, if the Pentagon for decades had always said what we don't want to do is push Russia into China's arms so they become bosom buddies. Well, that's
here we are.
Yeah. So I think that is that the new policy? Is it try and get Russia and China to become buddies and get more interlinked? So that's what's happening. And it's Russia and the BRICS are already working on a whole bunch of things in terms of coordinating together. They're trying to come up with various solutions to try and
outside of SWIFT.
Yeah, outside of SWIFT. That's the whole point. Everybody saw Russia get their US dollar denominated savings more or less canceled. So every central bank in the world saw that, and that's dollar negative long term. You're going to have more central banks buying gold, especially the emerging market countries in the East for sure are going to be buying more gold. So that's fine. The more they do this, the more it's going to push people toward that system in a multipolar world.
Is that the name of your show, James? Gold Rush? One of our attendees is asking that.
Yeah, I was in it. It was a show, Gold Rush. I'm trying to remember. Maybe they saw that. I'm not sure. I was in a show on History Channel H2, and it was one of those silly conspiracy shows. Maybe you saw that on my.
Did you get a Hollywood movie offer after that?
No, but I did get my friends from school to see me. I actually have a professional job and I actually use my degree. So.
They want autographed pictures?
Yeah. I mean, at least it shows that.
Anyway, you also have a very, a podcast that I didn't know about, and you have a lot of people paying attention to what you're saying. So, what are you telling people on your podcast right now? So, gold's been under a little pressure. It's not breaking out. It's not breaking down. It's
gold and silver have certainly been a disappointment recently, especially for people who look around and see the inflation numbers and wonder what the hell's going on and why isn't gold going through the roof.
What's your theory? Why?
I think we still have something upcoming that's going to be deflationary. I think at some point the Federal Reserve will do what it's trying to do, which is essentially break the markets, and then they'll be able to pivot and reverse course. But once that pivot starts to occur, I would expect some inflows, and you're going to start seeing, I think, bigger money come into the derivatives all the way down the market.
So what are they going to do? They're going to ring a bell and say, okay, it's we're through. And that's the day you buy gold.
They're already sending out signals like, well, we don't necessarily have to wind down our balance sheet by too much. 2 or 3 trillion is enough. If they try to do that, if they try and take 3 trillion off their balance sheet, something's going to break. Is we're already on the cusp of things breaking in the market. So it's been an orderly decline, which is what they want. And what you eventually see is disorder, and then they have to pivot because the disorder's here, and they have to ease the market and ease calm and ease fear, because it can go waterfall decline, especially the way that the stock market is set up with passive flows. You know, that can get real ugly real quick. So yeah, and then,
my thesis is, and tell me if you agree with it, is, you know, everyone's going, it's been a lousy inflation hedge. And maybe that's because it's a monetary hedge, and bear market in the dollar hasn't begun yet.
Correct. That's true. I mean, think about the dollar. It's been pretty strong for the last, 7 years almost?
Yeah.
I mean, the DXY was trading around a little lower than these levels in 2015, and now it's still around those levels, a little higher. And gold is, you know, in that time, more or less doubled each of those years. So the DXY is a nice signal, I think, for people who are day trading, short-term trading, even medium term. It's not a bad signal for gold because there's a lot of flows that happen because of that. But in the long term, you know, it comes down to the choice of what are you going to do? Are you going to devalue the currency, or are you going to, you know, ultimately that's where gold makes its move once people really start losing confidence in currencies, and that's working slowly but surely. And in time, I think they're going to realize that this is a secular inflationary regime, and that's been the policy since August 2019's Go Direct meeting in Jacksonville, Wyoming. I mean, you go back and look at the.
Oh, go ahead.
Yeah, you go back and look at the Fred M2 chart since August 2019, when the Bank of Japan, the Bank of England, Federal Reserve, and the European Central Bank all agreed that going direct, meaning to directly finance a lot of things and give money directly to people, essentially, to force helicopter money on the market. And by doing that, they can force, you know, secular inflation to resume and to come back, because, you know, for the last 2 decades, it's supposedly been not too inflationary and disinflationary, whereas now it's a different day, it's a different era. And the Fred M2 chart's up 46% since then. That's the M2, right? I mean, it's going to have ramifications far in the future, not just now with CPI supposedly 8.6, but it just shows that that's what they want. They want inflation come hell or high water, and they're going to get it.
Okay, is the gold silver ratio telling you with the recent little failing rally up there in gold silver? You think silver? I was looking at that.
I still think it's going to go to the 90s, and it may even go to 100. You know, make like a U shape and test that area. Ultimately, gold, I think, is going to lead us out of this. Silver is going to do some catch up later, but the gold silver ratio, I think, could go even higher still, the way it's trending. You know, if you have a little bit of weakness, like silver's just been extremely weak, and it's been trading around 21 for a long time now, and dipped below 21 late last week. So it's possible to see it dip again toward 20 and test that.
What would change your mind that silver was acting better? Closes back over 22, 23, something like that?
You need to see a rally beyond 23 and close a week beyond 23 for a rally. You know, it needs to get up well above 22, I think, before you can really start moving into it as a momentum trade.
Okay, so you brought a couple charts. I think you were showing in yen terms how well gold performed.
Yeah, it just shows you they're the most advanced in terms of doing QE. They started in 2001, and now they own more than half of their entire bond portfolio that's outstanding. You have the situation now where I think this one weekly bar that's way up here on the right, make this bigger. That's 80. That's about the equivalent of 80 billion in a week buying JGBs to yield co-control to keep the yield from rising higher than they can't allow. So essentially you have full fiat monetization. This is more or less the end game of how this goes when you basically buy everything that's not nailed down to keep the system, you know, where you need it policy wise. So, you know, long term, the yen could go way higher. I'm not sure in the short term, maybe there'll be a respite and it'll slow down its devaluation, but it's headed for a lot higher levels. And that is a real problem because the yen is a huge currency in the world, and it has a lot of ramifications in Asia for trade. So what you end up having is a situation that could be similar to 97, 98, where you have a currency crisis in Asia kicks off from this. So it's just something to keep an eye on. And it's obviously emergency hour. I mean, the fact that they're doing this much buying of their own JGBs to control the yield, it's a very, it's just not normal. This is obviously next level QE.
All right.
And we have just a long-term chart on
nice
JGBs and gold, or Japanese gold, which is, this is one of the stranger charts, and I've always looked at it. It's always been weird because of the yen carry trade. The fact that you had the 1980 high go so high here, and then it took forever. Even in 2011, it never got higher. Right? In 2011, gold was mostly record prices everywhere in the world except for, in the yen carry trade. The yen strengthened so much it never got back toward its old 1980 high. But now the breakout has happened. This level of support and pressure is finally broken out. So you have a runaway price for gold, and this, I would expect the more they keep doing all this yield curve control, and you're just going to expect a higher price of gold in Japan for the foreseeable future coming.
Okay. So you talked about losing confidence. About 6 months ago, the big argument was, why would anyone want gold compared to Bitcoin? And with a 60% sell-off in Bitcoin, even if there could be another run in Bitcoin, is there a possibility that some of the funds that were in crypto would lose confidence and start flowing into gold?
It's possible, but I mean, if you look at the size of the crypto market, it's a spec.
Not big enough.
And that was more of a talking point for twiddling thumbs and talking about it in terms of Bitcoin being a threat to gold. It's not, but people like to talk about that. Ultimately on the crypto side, you got a situation now where the BIS last week published their annual report, and they dedicated a good bit of that annual report. It's like a 200-page report to their upcoming CBDC systems. They mostly in that report talked about retail CBDC, but what's more important is the wholesale CBDC, which is basically it's the CBDC part of the system that they're creating, where governments will be able to trade directly with one another and settle directly. And so it's an anti-SWIFT mechanism that's being built. And so the BIS is working hand in glove with countries like China and Malaysia and places all around Asia. So they'll be able to trade directly, and you'll have less dollar demand long-term if that's the case. So, it goes back to the thesis that just go back and look at the pound sterling, which you said.
Who funds the BIS? Because I know, I was going to get to this Russian default, the first one since 1913. And those loans are to the IMF, right? But the U.S. is the IMF. Well, the biggest contributor, right?
Theoretically, the U.S. is the strongest party within the IMF in terms of voting rights and such. But under the statute of the IMF, it's supposed to be in the country with the largest GDP, and that should be China by the end of this decade.
Okay.
And you have a situation too where Christine Lagarde, I think in 2017, she used to be the head of the IMF. On her way out, they had those types of sit-around meetings where they have a whole bunch of lackeys listening to them, and she's talking to one of her colleagues at the IMF and saying that ultimately by 2027 she hopes the IMF is headquartered in Beijing, China. And that's her long-term hope and her long-term goal, and that was before she went off and I think
she tried to run the ECB.
Well, yeah, she's running the ECB now, and you have a situation where I think that's ultimately her long-term goal is to get this situation where China can hopefully, in her mind, be the headquarters for the IMF by 2027. I don't know if she'll get there or not, but I wouldn't put it beyond her. It seems like these people are pretty focused on what they want, and they usually end up getting it. So, the question of the IMF is not as important, I think, as the BIS. The BIS is literally building the system of the next future monetary system, as they call it. And the future monetary system they want is CBDC. And the reason I bring it up is because they're in that report, they talked about the situation in crypto, and you look at Terra and Lunar Coin and all these other coins that have gone almost to zero or to zero, And you have a situation with Tether, which is the third largest cryptocurrency in the entire world. And it's supposed to be a stable coin, but it's broken its buck for various timeframes in the last year or two. And you've had a lot of outflows. I think it's 66 billion now, maybe that's in Tether. But Tether was, I think, and if you look back at charts, you can see it ramped up a wall at the same time that you had this huge bull market in cryptocurrency the last few years. It was a mechanism used to leverage and pump the price and to try and get in the dumb money, and they did. And the dumb money has lost a lot of their money now. So I ultimately think if you have that thing fall apart, you've not seen the bottom of crypto winter. So I'm waiting for Tether to completely fail. And then maybe you could look around and maybe take a couple select bets and speculations on cryptocurrency. But in the end, it's, we're headed to a world with CBDCs, and there'll be some private coins around, but of the 20,000 cryptocurrencies that currently exist, I would expect 99% of them will be gone by the time we're in a world of CBDCs.
Okay. And, tell us what that's going to look like for the man on the street.
Man on the street is going to have a problem when it comes to privacy. And so the man on the street is going to, the powers that be are going to have a backdoor into his checking account. And so you have any moves of funds in your checking account. If the IRS wanted to go back and look and make sure that you were, doing your taxes correct, et cetera, they'll be able to tell very quickly if it was regular flows going in and out of your bank account. So privacy is the real issue when it comes to CBDC ultimately, and the taxing authorities, being able to see virtually anything going on within the controlled financial system. And so CBDCs are really ultimately a tool of control, and I think as well a quick way for the monetary authorities to give out stipends to citizens so they can at least afford food and some basic energies and stuff like that. So it's going to be a mechanism that's used by giving out those handouts. They'll quickly get people to create the CBDC app on their phone, and they'll get a quick adoption if they're giving out free money. And so that's going to be regular in the decades upcoming, because we're going to be dealing with inflation for a long time.
When do you think they're going to launch this?
In the United States, FedNow service starts 2023, and I think FedNow service is the backbone of the coming US dollar CBDC. I would expect the CBDC for the US dollar probably by 2024 at some point. They don't have legal authority just yet, but that's, how hard is it to buy off the right congressmen and senators to get that done? It's not expensive. It's very easy. So I'm sure that'll get done within a few years, and probably under an emergency, they'll do it quickly. So they'll be able to, hand out stipends, like I say. But if you look around the world, there's 100 countries representing roughly 95% of the GDP in the world that are working on CBDCs, and in some form or fashion, some level of development. There's already a bunch that exist that are I think China's pushing their pilot to a larger size now. And so it's already existing. It's already happening. You have it's not a CBDC, but in Brazil, the population is very quick to use. I forget the name of the new program they have for where you're walking around in a market and you just use your phone and you screen shoot a little thing there, and then you pay through your phone very quickly. And people really have adopted it. I think 2/3 of the population uses that over cash. So people are, I know that a lot of Americans don't like the idea of not using cash, and I understand it. And cash it'll still exist, but slowly but surely it'll be phased out as time goes on. But cash will be like the last place you can go, and bullion as well, to have a little bit of privacy and some wealth that's very hard to track or trace.
James, I saw a video on Twitter, and you never know if it's real or not, but showed a long line of Chinese waiting to get to the ATM, and that China, and the point was China was limiting the amount of withdrawals of its citizens from ATMs. Is that happening there?
There's 5 banks that are in trouble in terms of real estate. They're smaller banks, but there's a couple of worries that it's moving into the larger Chinese banks, and that's the real worry, is that you could have a bank run with one of the major banks at some point. It's possible that the lockdowns continued on and carried on for for the reasons of trying to.
Yeah, they didn't have the liquidity.
Yeah, trying to keep people from, running and getting cash out of their bank in too large a size. I think most people in China are very concerned about the real estate market and how badly it's performed the last few years. And a huge amount of their entire banking system's built on the real estate market. So yeah, there's going to be some ugly issue at some point in that banking system. And the question becomes, well, what the hell is the PBOC going to do? Of course, they're going to backstop their largest banks. You wouldn't allow any of their systematically important banks to fail, but the question is, yuan dollar trading at whatever it is right now, maybe 6.8 or something like that. I haven't looked lately, but at some point you would imagine that the yuan has to devalue more versus the dollar, and when that happens, usually it creates real chaos in the financial markets. And so at some point, I would expect in Asia that's going to come and rule and start. It's a potential catalyst for something really bad happening. So it's something to keep your eye on.
Let me ask you, anything you could disclose on how you're preparing yourself for a massive change that is underway?
So one thing I just real quick, just for we're looking at this huge Japanese gold breakout and the fact that gold is leading higher. And if you look at, which is always pretty interesting, that the silver price in Japanese yen, silver eventually follows gold, right? And if gold is just going to keep screaming higher and to the right, look at how depressed silver is versus its old high. It needs the 4 multiple just to get back to its 1980 high. So silver is very, very depressed still, and it's a long-term bet. It's not something I'm talking about that's going to happen in the next year or two, but come back 5-10 years from now, and you'll have silver at much, much higher prices, probably back up in this level or higher.
Well, you can be able to participate in this new regime, currency regime, and still have preserved, is the only way to preserve privacy, to just go to precious metals and sock them away. And then when the new system comes, I've heard people say they just want to get out of the U.S. banking system. How do you do that? Well,
I mean, it's been a long time for a lot of people who keep just enough cash to cover their bills and such, in their checking accounts, in their savings account, et cetera. I mean, what is the federal funds rates? What is it now? 1.75 roughly or so. And if you go and look at what they're offering you for a savings account, you might be able to yield somewhere near that if you go to some high risk one. You have inflation at 8.6 admitted. Inflation's probably in the mid-teens if you actually do a real data dive on how it's going in truth. So, cash is, I guess theoretically it's trash unless there's a major crash in the economy. Then it's nice to have a little bit of cash to buy up things on the cheap. But bullion is the same thing. Bullion typically in those types of situations, spot price will drop and the bullion price will not drop. You'll go and look at the bullion dealers, and what will end up happening is a divergence. It'll be like March 2020 where you have spot and silver going down to, I don't know what the number. Yeah, 12 or so it got to, and yet when you go to look at bullion, everything's still trading in the 20s per ounce. So it's a similar situation will likely occur if that happens. So it's still an asymmetric bet to me. It's a bet where the downside risk is very limited given all the currency creation and the secular inflationary regime we've now entered for this decade and likely into the next. So for me, it's a safe bet in terms of downside risk versus upside potentials, but it's going to take a long time to play out. I mean, this is gold is going to be the final bubble of this entire post-World War II debt super cycle. And so just look at this. If we're in a secular commodity bull, gold is going to be one of the last things that runs up a wall, and it'll be the last canary in the coal mine. So it's going to take many, many years. This is not a trade that's going to happen and play out in the next few years. It's going to take a long time.
Well, the last time we were in a tightening cycle, gold broke before grains.
Yeah, gold will. Gold will see it coming, and it'll start running up. Like for instance, this year, if we can see the pivot coming or expectations of Federal Reserve pivot coming, you'll see gold really start moving, and that'll be the sign that we're setting up for the next run in this bull market. And so for gold to be at new
I
nominal
think we
price.
are now. And
Yeah,
we're only one more high away in the Dixie to support it.
that wouldn't surprise me. Imagine if we go into a dollar bear market for, those things can last a decade plus.
Yes.
And so you have a situation where dollar's been pretty strong relatively versus other currencies, but what happens when it goes into a secular bear? You'll have gold, new nominal price highs in gold every week. It'll be a normal thing.
Yeah.
And
So
the more that happens,
you've never heard me say this before. And with all the negativity, there's still a lot of gold bulls out there. I mean, sentiment's still over 60%, but you never heard me say during our interview, don't wait to buy gold and wait. That's what I'm doing.
Yeah, I think you were right last time we spoke 6 months ago. The delay. You were definitely right in that call. And this final chart is a chart that I use just to remind people how silver has operated over the last 52 years or so. The blue line is essentially silver, how it trades outside of the Western trading hours. The red line is the spot price for silver, and then the black line is the New York COMEX price for silver intraday. Basically how the price of silver trades during COMEX trading hours. So if you study this chart, you'll see that eventually the red and blue line, they do converge. And you can look in the 2000s during silver's bull market in the 2000s, where the spot and blue line have caught up in 2006 through the run in 2008. Then we had the global financial crisis, a divergence between the blue and red line. But then by 2011, the red and blue line touched each other again in that bull market for silver that ran up to 50 in April of 2011. So that red and blue line, now the divergence between them is almost tenfold. It's more than tenfold, right? So you have a situation where my thesis is that, by the time this red and blue line converge, you're going to be looking at a price of silver near triple digits. And that'll be more or less the time to be taking profits, moving out, and some of your position into other things. But this has the potential, if things go real wrong with confidence in the currencies, that this thing can get really stupid to the upside as well. So at some point, this has to go on an exponential phase because of all the stuff that we've done to the system. And so as bad as it's been for silver in the last 11, 12 years, essentially, is as crazy as it could be in the next 12. So I still hold and maintain that this is going to go stupid as badly as it seems it's been for the last 12 years. It can get as nice and as crazy as it can be on the other side as well. So it's just one of those things that you buy it and you hold it and you just forget about it. You don't look at the price every day. If you're doing trades on a short, medium term basis, good luck to you, because it's a difficult market to trade in a short term basis. But on a long term, I think a prudent position in bullion it totally makes sense because of the limited downside risk in holding bullion versus the upside to come in terms of wealth preservation and even wealth appreciation.
All right. So best way for people that may have questions about, hedging and owning and storing physical and any other way that I believe you're a big believer in holding the physical.
Yeah, whether or not it's in your own domicile in a private way, you can do that. That's what a lot of people do if they have a small position. But if you get to a larger position of 6-7 figures, which we have many clients that do that, you can also, go directly and have a direct account for storage with Loomis or Brinks or G4S, something along those lines. So it's very common for people to have a combination of a little bit at home and then a lot in private, depositories that are looked over by secure logistics professionals. Right. And so, that is an option. And, we had mentioned earlier, I do a channel on YouTube, SD Bullion. Every week I do a bullion market update. So if people want to see, updates regularly on what's going on in the precious metals market and in markets in general, I do roughly a 10-15 minute weekly recap on Friday evenings that I publish there. So it's free. You can go check that out if you'd like. And sdbullion.com, that is the website.
Okay. James Henry Anderson, someone you could go to and have your questions asked if you believe that you need to have something before these CBDCs hit the street. So, thanks for keeping us abreast of that situation, James. And, you don't sound as like near-term bullish as I've heard you before. So I think that you will be in the next month. Once this dollar turns, James, it's game on.
We'll look forward to it, Dale. And people can also reach me on Twitter. The handle's at James Henry and you can just send me a tweet directly there as well. It's an easy way.
Follow James on Twitter at the minimum. So that, you have any physical or precious metal questions, James will give you straight answers. And appreciate your time again, James.
Sure thing, Dale. It's always good hanging out with you guys. And, hopefully we get to talk again soon.
All right, we will. I'll talk to you, James. Everyone, James Henry Anderson. Follow him on Twitter at James Henry and hope you guys have a good turnaround Tuesday. And I hope oil cracks. And for the rest of you, remember, don't just count your pips, count your blessings. You could be with the team on the morning edge in 9 minutes. So, we are living in interesting times. All right. So adios, everyone. Have a great trading day. See ya. And thanks again, James.
Thank you.